So, Bitcoin, different demographics, but which explanation actually captures what Bitcoin is across the different demographics or age groups or levels of IQ? That's what I want to tackle today. And it is a fascinating video this time around, I can tell you that. Because what we've done in this video, we've gone in trying to find a level that actually explains Bitcoin to the targeted audience. So we're talking of someone who is young, and we've used the definition or the explanation of that is ideal for someone who is around 5 years old. So that thing about explaining Bitcoin to me like I'm 5, it's included in this video. A teenager, an investment banker, a grandma. Your grandma, if she's watching, she needs to watch or to wait for the segment where we are explaining Bitcoin for grandmas and granddads. And then we also have an explanation for politicians. So we've got everything for everyone in this video. So if you want to know more about this, please stick around. But before I jump into our explanation on what Bitcoin is for different demographics or IQ levels or different levels of understanding in society, please keep watching. But note that this information is not financial advice of any sort. It's just meant for educational as well as entertainment purposes. And I think this is going to be educational on a different level. So stay around, please, stick around. So let's start with an explanation for Bitcoin with 5-year-old. So those who want things simplified, mind you, some people who are adults, they want things to be explained in a very simple manner. That's what we're going to try and do in here. I know there are other sources or other people who have done it better, but this is our own take. All right, say you are 5-year-old or explaining Bitcoin to me or to somebody like they are 5. Imagine you have a really special sticker and you want to trade it with your friend for a cool toy. But instead of giving the sticker directly to your friend, you go onto the playground and tell everyone that you're about to trade it. Everyone writes down that you are trading or you have traded your sticker for the toy, so no one can say you did not. So they can't say you are lying, right? Because it's all in the open. Blockchain is open. Now, think of Bitcoin as a kind of super special sticker, but instead of being on paper, it's on a computer. You can trade it with people all over the world, just like in the playground. Everyone writes down who traded it, so it's always fair and transparent. These special stickers can be saved, shared, or traded, and because everyone keeps track, no one can cheat or steal them. It's together, unless you let your wallet get hacked, of course, someone will steal it. So Bitcoin is like a magical sticker you can use to trade for things, and everyone on the playground or in the world make sure the trade is fair. So it's all open. You are doing it in the playground. Our playground, the computer network, and blockchain. That is our playground because it's all in the open. You can track different transactions, different wallets, what they are doing, and so forth, because it's on the blockchain. So that is your explanation if you're 5-year-old, and well done. You have graduated now. You understand what Bitcoin is. Let's move on to an explanation for a teenager. It depends. Teenager, the age range changes from country to country, but I'm going to use one that's applicable to the UK. So as a teenager, imagine you are playing a big online game where you can earn and trade virtual coins. These coins are valuable because you can use them to buy cool stuff within the game, like rare skins or gear. But there's a twist. These coins aren't controlled by the gaming company that developed or owned the game that you're playing. They are part of the game itself, and every player helps keep track of who owns what, okay? Because it's now all player owned. Now, replace the game with the real world and those virtual coins with Bitcoin. Bitcoin is like digital money, but instead of being controlled by a bank or a government, it's run by a network of computers all around the world. These computers work together to keep a big shared record of every transaction, so everyone knows who owns which Bitcoin, and nobody can just make fake ones or take someone else's without everyone knowing. Even those who scam or drain people's wallets, who hack wallets, we can still see what has happened. You might not know who is actually behind it, but you can see what's going on. This is why wallet safety is very important. Hardware wallets, most importantly, and don't ever share your seed phrase with anybody. When you send Bitcoin to someone else, it's like sending them digital money that they can use however they want. No one is going to tell you, no, you can't buy that or you can't send it there because it's your money. You are in control. If you tried sending money to someone, say for the first time, the amount of questions or security you get, or for those in certain countries, you want to go and withdraw a sizable amount of money, you have to go through an investigation or an interrogation. You go through an interrogation, but it's your money. Well, we think it's our money, but it's not, because the bank has created it, so it's their money. There you go. It's permissioned, whereas Bitcoin is permissionless. This process is secure because of a special technology called blockchain, which is like a digital ledger that everyone everyone can see, but no one can change without everyone seeing. So no one can actually go behind the scenes, mess the ledger without people seeing. If you do, people will just ignore you because there has to be consensus from everyone involved. So if you become part of the network, you also have the power to say, okay, this is what's happening. I don't like this. Okay, that's what it is. So Bitcoin is digital money that is decentralized, meaning no single entity controls it, not even your government or central bank or even your bank. It's secure, transparent, and global, making it a new way to think about money in our increasingly global digital world. So what's not to like? After all, you're playing a game with someone in Canada and you're in Pakistan, or you're in New Zealand, you're playing a video game with someone in Nigeria. That's the world we live in now. So if you're a teenager, this is easy transition for you. You just need to understand what Bitcoin is and what you can do with it. And I think we covered some of that in this video under your segment. Now, third, dear grandma, this is my 8-year-old dear grandma. How am I going to convince you that Bitcoin is good? She's not into technology, but let's try this. Grandma, imagine you are playing bingo with your friends. In the UK, I think most countries, they've got games for older people, but in the UK, there are games for older people, but other young adults, they go and play them as well, just to kill time. So imagine you are playing bingo with your friends, grandma, but instead of using paper cards and markers, you're playing on a computer. Yeah, don't worry, computer, it could have just 2 buttons, okay? Computers are different. They all don't have this complicated keyboard. Now, instead of winning prizes like chocolates or small gifts, you win special bingo coins. These bingo coins are really valuable, so they are not just tokens. They are really valuable. In Bitcoin case, grandma, people are talking of Bitcoin reaching $70,000. Guys, this is not financial advice. It's just an explanation to grandma what Bitcoin is. Okay, but here's the interesting part, grandma. Instead of a bingo hall keeping track of everyone's coins, you and all the other players can keep track together as a group. Everyone who's participating can keep track. Every time someone wins or trades their bingo coins, all the players write down in their notebooks so everyone knows how many coins each person has. So there's no cheating. Those bingo coins are like Bitcoin. It's a special kind of money that you can't hold in your hand, but it is still valuable, grandma. And just like how all the players in bingo keep track of the coins together, Bitcoin is tracked by lots of people all over the world using their computers. This way, everyone knows what's going on and no one can cheat. Grandma, even if you don't have a computer, your Bitcoin is still there. You could leave it for 10 years, no one touches it until you move it. That's the wonderful thing about Bitcoin. So you don't have to have a computer all the time. Have your Bitcoin, you stash it away in a wallet. As long as it's secure, no one will ever move it until you do. That is one of the wonders of Bitcoin, grandma. And just like how all the players in bingo keep track of the coins together, Bitcoin is tracked by lots of people around the world using their computers, like we said. This way, everyone knows what's going on and no one can cheat. So if you're not looking, some of your friends and other players are looking, so there is never a chance that you'll get cheated. So you don't have to look at it all the time. All the players could ignore it, it will still remain there, nothing will happen. And no, the computer does not do anything to it until someone actually make it do something. So Bitcoin is like winning a bingo game where everyone helps keep track of the prices, making sure that everything is fair. You can use these bingo coins or Bitcoin in this case to buy things, trade them, or save them for later. Just like real money, but it all happens on the computer. Grandma, what's not to like? If there are any grandmas that watch the channel, please comment in the comment section and let me know whether this explanation hit a chord with you. If not, I'll try again. Moving on, Mr. Banker, let's try and make you understand Bitcoin through what you understand the most, that is through your financial lens. So Mr. Banker, Bitcoin is essentially a decentralized digital asset that operates on a peer-to-peer network, which is maintained by a distributed ledger called blockchain. I mean, if you've worked for other blockchains like your JP Morgan, I think they have their own internal networks or permission blockchains. So concept of blockchain for you, Mr. Banker, is not alien. It's something you're probably used to already. You're familiar with the concept of a blockchain. But coming back to Bitcoin, think of it like a currency and asset class that is rolled into one, but without a central authority like a central bank or government controlling it. It's exciting. No one is controlling it. But for you, Mr. Banker, I probably need to go into detail. Key concepts and mechanism for Bitcoin. We've got the supply and demand dynamics. Bitcoin is a fixed supply cap of 21 million coins, which creates a scarcity akin to commodities like gold. We know gold in principle is not fixed because people can go and explore places to mine and mine more gold. So you could say that is a fallacy that gold is scarce because people can mine more of it. The limited supply combined with increased demand can drive price appreciation, making it an attractive asset. asset for speculative purposes, and that suits well within your business model, Mr. Banker. We also have the halving events that affect the supply and demand dynamics. Halving events is where the reward for mining new Bitcoin is cut in half every 4 years. So the miners who mine Bitcoin, they get rewarded for their efforts, but the rewards they get every 4 years, those rewards are cut, meaning there is reduced new supply of Bitcoin. This mechanism has historically led to significant price movements, similar to how supply constraints might impact on prices for commodities like oil or precious metal. You know what OPEC does? Where they'll sit down in a dark room and discuss what they want to do over supply or pull supply from the market. With Bitcoin, it's all coded in a computer. No one can control that. I'm sure that's a good concept for you, Mr. Banker. I think you will consider this favorably. The second key concept, Mr. Banker, is store of value and inflation hedge. That's incredible. You can hedge against inflation. Bitcoin is often compared to digital gold, serving as a store of value. In an environment of quantitative easing and low interest rates, Bitcoin can be viewed as an alternative asset to hedge against fiat currencies. That's what we call them, because governments are debasing their currency and there's inflation, much like gold or treasury inflation protected securities. So Bitcoin can be viewed as an alternative asset to hedge against fiat currency debasement and inflation, much like gold or treasury inflation protected securities. So you don't even need to complicate it. Just hold Bitcoin. That's it. Simple. And unlike fiat currencies like your US dollar, your British pound, your euro, Bitcoin's monetary policy is transparent and predictable, which contrasts with central bank policies that can vary based on macroeconomic conditions, political winds, and so forth. So again, Mr. Banker, what's not to like here? The third feature is diversification and portfolio allocation. Bitcoin's correlation with traditional asset classes, equities, bonds, commodities, is often low, making it an interesting tool for portfolio diversification. I know people have been trying to make correlation between the two, but it's not a good fit. I think they intersect. I think that's just it. I don't think they're correlated at all. Including a small allocation to Bitcoin, Mr. Banker, can potentially enhance risk-adjusted returns, similar to how one might use alternative assets like real estate or private equity. The emergence of Bitcoin ETFs and derivatives markets, such as futures and options, also provides investment opportunities for investment bankers with more traditional financial instruments to gain exposure to Bitcoin, allowing for hedging strategies and more sophisticated portfolio management. What about this one now, Mr. Banker? Risk-adjusted returns and volatility. Bitcoin exhibits high volatility, there's no doubt about that, which is a double-edged sword. While it offers the potential for high returns, this also represents significant risk. This volatility is akin to high beta stocks or emerging market assets, requiring careful consideration in terms of position sizing and risk management. Sophisticated investors might use financial instruments like options or futures to hedge or leverage their positions in Bitcoin, managing risk while seeking to capture the upside potential. So here, Mr. Banker, it is the upside potential of Bitcoin that I think will appeal to you the most. Why? Because I know you'll do the right thing, try and make higher returns for your clients, which also means high commission for you. What's not to like? Other people are rushing ahead of you and you are missing out. What's not to like? The next feature, Mr. Investment Banker, is the decentralization and intermediation. Bitcoin operates without intermediaries, reducing transaction cost and settlement time. How many times have we had people saying money went missing in transit from one bank to another? Some people, they talk of millions. That's crazy. You send money today, it leaves your account, and there's no way of tracking where the money is until it appears. And people have had money gotten lost along the way in the past, millions of dollars or millions of pounds. This disintermediation is comparable to innovations in financial technology known as fintech that streamline processes traditionally controlled by banks like cross-border payments. The underlying blockchain technology offers transparency and immutability, which is analogous to the use of smart contracts in automating and securing transactions without the need for trust in a central counterparty. And finally, Mr. Investment Banker, the regulatory landscape for Bitcoin is evolving. And as with many asset classes, understanding the regulatory risks and implications is crucial. This is similar to navigating the regulatory environment for derivatives, structured products, and alternative investment. Investment bankers need to be mindful of compliance with anti-money laundering or AML and know your customer or KYC regulations when dealing with Bitcoin, just as they hold with traditional financial products. So there's nothing strange here about Bitcoin. As long as there's regulatory clarity, you still do the same due diligence with any of your traditional asset investment anyway. You can apply the same approach or knowledge here. So in conclusion, Mr. Banker, Bitcoin represents a unique asset class that blends characteristics of currencies, commodities, and alternative investments. For you as an investment banker, it offers opportunities to diversify portfolios, hedge hedge against macroeconomic risks, and participate in a rapidly growing financial ecosystem. However, like any asset, it requires a nuanced understanding of its volatility, regulatory landscape, and market dynamics to effectively manage risk and maximize returns. So, from your world, there's nothing complicated here because some of these things you're already familiar with. So, I would want to know if you are an investment banker or you are in that field, does this explanation of Bitcoin convince you that this is probably something you want to allocate even a tiny bit of your own investment or your client's investment? Let us know in the comment section. Having said that, guys, this is all educational. It's not financial advice. I'm trying to educate different types of demographics about Bitcoin and the wider cryptocurrency. And finally, the weird one, the politician. Let's try and make you understand Bitcoin so that you can actually champion for our ecosystem instead of passing rules that want to protect the status quo. They want to protect antiquated banking and financial systems. This is the future. The future is defined by technology. Forget about the name. This is technology. The antiquated methods of transferring resources or money or whatever. Let's look at something else. After all, we've moved from donkeys and carriages to cars, trains, now jets and so forth. So why can't we move from rocks and paper, fiat money and stuff and go to technology? After all, that's where we all live. Anyway, so Mr. Politician or Madam Politician, understanding Bitcoin in a political and socio-economic context is part of this explanation of Bitcoin for you, for your understanding, for your consumption. So hear me out. Bitcoin is a decentralized digital currency that can play a role in enhancing economic opportunities, financial inclusion, and even national financial stability. Here is how it could be relevant to your goals as a politician. Financial inclusion and empowerment. That's number one. Here we are talking of access to banking. Many people, especially in underbanked or rural areas, may not have access to traditional banking services. Bitcoin can be accessed with just a smartphone, enabling people to participate in the global economy without needing a bank account. We all know the issues around opening a bank account in certain jurisdictions, the amount of paperwork required. Some people may not have that. It's like offering everyone in your community and amongst your constituency the ability to store and transfer money safely and easily, even if there isn't a local bank branch. So you won't have your constituents complaining that they no longer have a bank branch where they live, because the branch is in their pocket, it's on their phone or their computer. We also want to talk about remittances when we are talking of financial inclusion and empowerment. Many constituents rely on remittances from family members working abroad or even within the same country but working somewhere else in a different area. Traditional remittance services can be costly and slow. Bitcoin allows for cheaper and faster transfers, meaning more money stays with the families who need it. This can directly increase the disposable income of your constituency. So think about it. And if you are a politician in a developing country, there is no excuse. I repeat that. There is no excuse. Unless you are in politics just for your own good. You want to pilfer public coffers, that's understandable. You are being selfish. If you want to represent your constituents, you need to consider Bitcoin and cryptocurrencies and blockchain technology. That is for the good of your constituent. The next area I want to share with you, Mr. Politician or Madam Politician, economic growth and innovation. I know it's a term that is bandied across by so many politicians who have got nothing of substance to share. But here, right now, I want to share with you something that has got substance and something that can actually be shared with your community or your constituents, and they will understand what you mean. We can use Bitcoin and cryptocurrencies to encourage entrepreneurship. By supporting the development of Bitcoin and blockchain technology alongside other cryptocurrencies, you can attract technology startups and innovative businesses to your area. Even your constituents, they might actually take part in this because the threshold to enter this market, this field is lowered. The barriers are lowered. New companies can create jobs and stimulate economic growth, much like how fostering a technological hub or financial center can revitalize a local economy. So if you thought having a banking headquarters within your constituents' boundaries is a good thing, then having so many branches, banking branches or financial branches within the pockets of your constituents, I think that is even stronger because they can now control what happens with their finances. And don't forget, this is not about taking power from local currencies. In fact, the impact from Bitcoin and cryptocurrencies is the opposite. Local currencies can be stabilized through Bitcoin and other cryptocurrencies. In regions with volatile national currencies, Bitcoin offers an alternative store of value. This can protect the savings and purchasing power of your constituencies from inflation or currency devaluation, similar to how a stable economy or a sound financial policy or policies protect against economic instability or abuse. So, what's not to like, Madam Politician or Mr. Politician? This is all about the benefits of your constituents. Unless, of course, you are into politics politics for your own benefit. We can also talk of transparency and accountability. Reducing corruption, Bitcoin transactions are recorded on a public ledger called the blockchain. This transparency can be leveraged to reduce corruption and ensure that public funds are used properly. Imagine using a system where every dollar spent on a public project can be traced and verified, making it easier to hold officials accountable. Instead of holding sensitive discussions and debates, it's on the blockchain. All you need to say is, it's on the blockchain. Where is this? Where is that? Where did that go? Whose wallet is that? If that's what is required, because that will be an investigation. Think about it. We can also use Bitcoin and cryptocurrencies to raise political campaign funding. Bitcoin can also be used to ensure transparent and traceable political donations. This can increase trust in electoral processes by making it clear where campaign funds come from and how they are used, akin to implementing robust campaign finance reform. Now, there will be people who say identifying people's wallets is a dangerous thing. I get that. But if you want to donate to a political party, you should do it in the open. So you may want to create like a different wallet that you attach identification to and use that for those things. That will be my solution to that, my proposed solution. Number 4, financial sovereignty and independence. National sovereignty for starters. By integrating Bitcoin into the economy, the country that you represent can reduce its dependency on foreign financial systems and currency. This can be a step towards greater financial sovereignty, allowing your nation or your country to navigate global economic pressures more independently. Monetary policy alternatives. For countries facing economic sanctions or restrictions, Bitcoin provides an alternative way to engage in international trade and finance, bypassing traditional finance systems that might be blocked or limited. Most of the issues that politicians or country leaders have, most of them are down to ideology or individuals. But it is my belief that the whole country should not suffer for that. That's why I'm proposing Bitcoin to be used as an alternative monetary policy. And finally, education and digital literacy. Digital skill development. Promoting education around Bitcoin and technology and cryptocurrency can boost digital literacy among your constituents, preparing them for jobs in a growing tech-driven economy and for the future. Just as policies aimed at improving STEM, science, technology, English, and math, that's what it stands for, can help create a skilled workforce. Understanding these new technologies can open doors to future opportunities. So, Madam Politician, Mr. Politician, Bitcoin isn't a digital currency. It's a tool that can help bridge economic gaps, promote transparency, and foster innovation. By supporting Bitcoin, you can empower your constituents with better financial tools, attract new businesses, and ensure a more inclusive and transparent economy. These efforts can lead to real, tangible improvements in the quality of life for the people you serve, aligning with broader goals of social economic development and good governance. What's not to learn? You should put that in your manifesto if you are a responsible politician. Anyway, that's my small contribution from my corner of the world. It's FD for 5yr-old TV, signing out for now. Bye.